Hey guys, welcome to this week's podcast episode for the Financial Freedom Podcast. I've got a really special guest for you today, Brian Pillmore, and he's pioneering a new era of banking strategy. So today's talk is going to be all about the banking sector, financial crises. It's going to be really fascinating. We'll talk about digital assets as well, and he's the founder and CEO of VisBanking, and it's a pioneer data-driven banking platform. And I'm really happy to ask Brian about this. So, Brian, welcome.
Hey, thanks so much, Chris. Great to be here.
Yeah, kind of set the stage. Talk about your background, how you got started, and what you do.
Yeah. Well, I'm leading a startup called VisBanking today. And like you mentioned, we're a bank intelligence and action system. And we help bank stakeholders, be that bank executives or leaders or stakeholders at banks, people that sell to banks, vendors to banks, to better understand the bank that they're looking at and maybe the competitors in the landscape. So I like to say, I don't think there's anybody that has more information about the banks in the US and the credit unions than we do. Billions of records spanning 30 years. So we kind of nerd out on banks. I would say, my background, I started as an engineer, and your audience, I think, could probably appreciate that, getting some deep technical training, and then your career takes you in a different direction, right? And in the midst of my engineering career, I wanted to explore leadership. And I talked to my boss, and I was in a great job at the time in a beautiful area in Virginia. And she said, "Oh, Brian, you definitely could be a leader here. You just hang around for 10, 15, 20 years and you're it." And I knew that day, while she was well-meaning and she was very kind, that path was not right for me. So I made a change, and I moved into finance and accounting. I taught myself some accounting skills, took one class at the community college, and then I became an auditor, a financial auditor, for 3 years. In the middle of that, the financial crisis happened. And only when you're working for a really big company can you do this kind of thing. But I ended up starting a bank with two other guys in this massive company called General Electric. We started a bank in the midst of 2008. And from April of 08 to August of 08, we raised $10 billion in the brokered CD market, brokered certificates of deposit. And then we acquired the second largest equipment finance company at the time from Citigroup. And that formed along with $1 billion of capital from General Electric, formed a pretty large bank that was an industrial loan corporation. It's a specific kind of bank they have industrial loan corporations in different states, but the one that has the most of them is Utah. So this happened to be headquartered in Salt Lake City. So I bounced between Connecticut, Salt Lake, and Dallas that summer. That was my trial by fire learning about banking. Other than having a bank account and having a credit card, I knew nothing about banking.
Yeah. Yeah, really fascinating story. And I love this. I love the story that you talked about. Your boss is like, yeah, stick around for 60 years and, and then you'll make it. It's quite, laughable these days. We'll talk about Viz Banking's role in modern banking. And can you explain how Viz Banking's bias system is revolutionizing the banking sector and what makes it unique compared to traditional banking analytics tools?
Yeah, there's a number of tools on the market. We're kind of the new guys to the playing field. Number one, our data is all visualized. So I think that makes a big difference, right? Nobody can read, mountains of reports or looking at tabular data, maybe except for, maybe you got some anesthesiologists in your crowd. Those are the guys that are good at looking at tables. But outside of anesthesiologists, nobody can look at a table of data and understand what's going on. So first of all, we visualize the data. Secondly, we integrate the data. So all these pieces of data are in different silos. Think like people data, legal entity data, financial data, regulatory enforcement data. Well, you got to connect the silos so that you can see, oh, this bank had a regulatory enforcement action from this regulator. Their financial performance before that dipped. And by the way, we can also see that their CEO left. and here's the new CEO. So we can see all that stuff in our platform. And so it gives you, so our the silos are connected. And then we don't believe that data is meant to just be viewed or digested by humans. We think like we're driven to action. So that's like the bank intelligence piece. Great. You got the intelligence. Now what do you do with it? Well, it's to drive action. So we've built sort of a micro application layer on top of all this data. And that micro application layer lets you do things with it. So you could say, hey, show me all the banks that grew loans last quarter and who are the customers that they added. That's a big step. Then secondly, how about I run a bank and I need to find a new chief credit officer? Well, we got a 2.5 million person data set of just people that work in banking and financial services in the US. Let's find you a chief credit officer that's near your office in I don't know, pick the Woodlands, Texas.
That's where I'm from, actually.
Oh, even better. Wow.
Yeah. Yeah, I love that. And quite interesting because I'm actually these days I'm really kind of a subset of my attention is focused on like fintech and especially data analytics, AI, blockchain, the role of digital assets, whether again this is not financial advice, but the role of that Bitcoin is playing as a digital asset. Still very early, but so kind of talk about this navigating financial crises and with your experience in various roles in the banking sector, what strategies do you suggest for banks to navigate through financial crises effectively?
Yeah, wow, that's a deep one. Okay, so for your viewers that are unaware, and I bet your viewers are very aware because they're super intelligent people and they care about their financials. We are in the midst of a banking crisis. It is a quieter crisis than 2008. Why is it quieter? Well, because it's not being led. Eventually, I think we're going to get there, but it's not being led by deterioration in credit. Why? How is it being led? What are the 3-4 banks that we've seen that were headline Wall Street Journal failures this year? It was led by illiquidity that's driven by interest rate policy. So interest rates rise, and these banks, because they couldn't deploy their deposits into high quality loans, there just wasn't enough loan demand in our economy over the last 4 years as the federal government put over 5 trillion, almost $6 trillion into the money supply. These banks put it into securities. And I know this is a little bit long-winded, a little bit rudimentary, but I want to get this foundation laid. So those banks, in order to get any yield on those bonds that they put on their balance sheet, they went long. And we saw what happened, right? Silicon Valley Bank, there in October of 22, when they reported earnings for the third quarter, their bond portfolio had an average duration over 6 years long. So that means in order to unwind, half of that portfolio, that it would have taken 6 years to just unwind half of the portfolio. And then they had a run, so that drove them to illiquidity. So all of those assets are tied up in a bond, a treasury bond. And in a normal environment with sort of steady rates, you can come in and out of those hopefully shorter term bonds. But these guys went long. They're in 5, 10 year, maybe 15-year treasuries. That's a problem. So if they're going to sell them after interest rates have risen, those bond prices are lower, inversely correlated to interest rates. So to make a long story long, that is what drove the illiquidity for the banks. And we're in the midst of that. It has not unwound completely. There are more bank failures to come. The government has shored up confidence for now, but that, it's a different kind of crisis than 08.
Yeah, and so well said. And like you said, we could do a webinar, and it's really interesting because 08 was kind of like the beginning, but then look at from 08 to 2023 now or 2024, it's it's getting more frequent and it's getting faster. So 3 or 4 banks failed within a week and they got shut down. And then '08, took almost like a year to play out with, first Bear Stearns and then culminating in Lehman. And it's all a problem with fiat currency and central banking and too much debt and just, kind of money printing and kind of just reckless spending on just frivolous things.
Yeah.
We can talk about all of this, and then bailouts for, the rich and, unethical greed, fraud. So talk about ethics and organizational behavior. What are your thoughts on that?
You like the big topics, Chris. This is great. Yeah, I think ethically, I think it's absolutely criminal to add significant money supply. That's where the problem began. And I think we can see it even leading up before COVID. There was loose monetary policy. And then it was like pouring gasoline on the fire. It just exploded, and you can just see it for those economics nerds out there. They are already looking at this, but for those uninitiated, just go and search the Fred M2 money supply, and you'll see how much the money supply just took a rocket ship up in from 2019 to 2020 and so on.
Yeah.
Organizational behavior. I think that is, like you talked about, the problem with fiat currency, the problem with money printing and so on. I was talking to a friend yesterday about what is money. When we get back to it, like fundamentally, and I'm not a classically trained macroeconomics guy or anything, but money fundamentally is the result or the evidence of converting labor, converting useful assets and equipment and so on. What is produced is money, real wealth. But unfortunately, we have governments that want to play like I call it the not so invisible hand, right? Like we can see exactly what they're doing somewhat because we have some government reporting that is at least directionally correct, probably at least better than the reporting out of China. But it's criminal to put that kind of money supply in, and gosh, shocker, it causes inflation.
Yeah.
Right.
Yeah. Like I said, and so it's like quite interesting. There's a really good book by Lynn Alden talking about broken money, and I think especially since the advent of Bitcoin, a lot, I've really understood the idea of money better, what it is. It's a medium of exchange, it's a store of value. And, kind of how the money system is broken. It's kind of just old, central banking, and how it's, we need more transparency, which brings me to my next question is you talk about this economic influence on the banking sector. And so it's so interesting because again, the U.S. rose as the dominant superpower after World War II, and that's and basically the U.S. petrodollar put everybody's making it the world's reserve currency. But now a lot of countries are saying, F this, I'm not gonna depend on this. There's sanctions, and they're trying to get away from it. So kind of talk about is what the actual real impact of de-dollarization, is the West losing its grip? Talk about that.
Yeah, I think it's a little bit overblown. I'm not sure that I would lend a lot of credence, or maybe those people that are making those announcements in books or publications are maybe a little ahead of their time, and more power to them. Like they're going out on a limb there saying like, hey, this is going to be a de-dollarization. At the end of the day, I liked your phrase, like that money is a store of wealth. And I like, even to preface that with that, it's a temporary store of wealth in terms of our fiat currencies. Yeah. So if your wealth, if you're a physician listening to this podcast or anybody else, and if your wealth is primarily stored in fiat currency, first of all, it's an unproductive asset. Secondly, inflation is eating away at it. Third, you're actually taking on counterparty risk due to the fact that that currency is issued by a government. And while it may be, the most stable government in the world, no government is completely risk-free. The so-called risk-free rate ain't exactly risk-free. Yeah. So when I look at the store, like where do I want to store wealth long term? It'd be better to own a bank than put your money in a bank, right? It'd be better to own a productive asset, an apartment building, than to store your money in a fiat currency. It would be better to own a tangible asset than a financial asset, perhaps.
Yeah.
Right? A productive tangible asset, right? So would I like to own an apartment building or a REIT? Well,
Yeah.
one's a financial intangible security, and the other is a physical building. You might say, well, I never actually own the building. I just own an interest in a legal entity. Well, fair enough, but it's a little closer than it is to a REIT that owns a legal entity that owns a legal entity that owns a building. So that's the way I look at it, is as we're building financial independence, we're trying to get our be as efficient as possible in getting our store of wealth into something that's tangible and productive. That's not a temporary store of wealth, but actually a long-term store of wealth.
Yeah. And it's so well said. And again, it's like this, going back to this idea of, what is money? And it's basically, it's where you store your wealth. And, in the past, like in the industrial age, how do we create income? Is that through our labor, right? And then once Nixon took the dollar off the gold standard, basically creating fiat currencies, now Capital One, and it's kind of like the rich, they're able to access credit and lines of credit, debt, and they can acquire these assets, real estate, stocks, a lot of different things, and they have access. And whereas the poor, they're saving and they're getting income in a depreciating asset, and they're struggling, taxes, debt rising. And that's why there's inequality. So, it's very fascinating. Like I said, our financial system is broken, really needs a, revamp. One thing, kind of talk about this idea of community leadership and building the future, and how, VisBanking is doing that, how you're doing that, kind of ended on a positive note, and how people can follow you.
Yeah, I think when I look at community and leadership, I think that's actually part of wealth. Like, I think one of the largest stores of wealth in our lifetime and beyond our lifetime is actually in relationships. So when I talk to my own children, I talk about being wealthy, not as just having money or assets, but actually being wealthy in terms of our relationships, our involvement in our community, the impact we're having on the world, the things that we know, intellectual wealth, and so on. So there's many different forms of wealth. And what we're doing at VisBanking is actually building intellectual wealth, right? Where we know we have deep knowledge on an industry. And I really enjoyed what Bonner and Bonner said in the book Family Fortunes, to talk about wealth building and generational wealth. They talk about different forms of wealth, and they say that actually the financial wealth is actually the least important to transfer generation to generation, because it's actually what made you wealthy. The means of wealth, the relationships you have, what you know about an industry, what you've learned and passed on from one generation to another, so you don't have to repeat the same mistakes. That's real wealth. And so that's what we're building, and my involvement in my local community with community bankers, and then, regionally and nationally as a leader in the banking industry, is part of what I'm doing, not just for myself, but for the industry, for the community, and for my family. I hope that my children develop deep expertise in some area that maybe is like mine, but maybe not, and maybe I can help them along that way.
Yeah, I love that. Fascinating discussion. And how can people check out VisBanking, follow you on socials, check out your work?
LinkedIn's our main social. So we publish there 5 days a week. Please join us there for conversation about banking. And then our own website, and any stakeholders, if you're an investor in a bank, if you're a leader in a bank, or if you're just a significant customer of a bank, and you're concerned about the counterparty risk with that bank, I'd encourage you to check out our site at visbanking.com, VISbanking.com.
Yeah. And for all the listeners out there, let's thank Brian for a fantastic discussion on the cutting edge. Be sure to check out all his resources. All the links will be in the show notes. And with that, thanks so much for a fascinating discussion.